we detected an unusual trade worth over $300,000 on HIVE Digital Technologies stock, ticker symbol HIVE. And just like a hive, an investor is swarming in with a lot of activity buzzing inside this trade. So in this video, we'll break down this unusual option activity to figure out whether this wealthy investor is bullish and buying, expecting the stock to move higher, or bearish and selling, expecting the stock to move lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into our analysis to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, the most unusual trades happened on August 19 at around 9:59 a.m. for these October 17 options at the 3-strike calls. These same call options were being traded multiple times, and they were also being traded at roughly the same price, about $35 per contract. Now remember that options prices are shown here, and each options contract controls 100 shares of stock. And so to get the dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each contract costs $35. And so to calculate the total cost this wealthy investor spent, we multiply the price per contract by the total number of contracts traded. And so how many contracts did they trade? Because it's not just a few hundred contracts that you see here. There's more than meets the eye. That's why we always take a closer look at the data to improve the accuracy of our analysis. So let's check how many open contracts existed before this unusual trade was made. This is the historical data from August 18, the day before this unusual option activity happened on August 19. And looking at the October 17 options at the 3-strike calls, the open interest was only 126 open contracts. And now that the data has updated, let's examine the option chain for these same October 17 options at the 3-strike calls. And we can see that the open interest has now jumped to over 10,000 open contracts, a significant increase from just 126 contracts previously. This clearly shows strong interest in these options now. So this tells us that this wealthy investor opened new contracts here on August 19 because the spike in open interest confirms these were not just day trades that closed out. This wealthy investor is holding the position, and with this kind of size, they're making a strong directional bet and putting real money on the line. How much? Well, let's do the math. First, we calculate the number of new opening contracts. So we start with the current contracts that are opened, 10,570, and subtract the 126 contracts previously opened, which equals 10,444 new contracts opened. Next, we estimate the cost of this unusual trade by multiplying the number of new contracts by $35, the price we saw earlier on the options time and sales tape. And this equals a total trade size of approximately $365,000 for this unusual option activity. But keep in mind, just because a trade is 6 figures does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the more selective trades we share on our website. And so if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. Keep in mind that our members get early access to trades like this before anyone else, even before we share them publicly. And if you join the membership through our website instead of YouTube, You'll also receive additional trade alerts by email, giving you even earlier access. So if you're tired of being late and want more time to act on these opportunities, just head over to our website, where you can see in real time when and which stocks wealthy investors are trading on Wall Street, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? With that said, even though this trade carries higher risk, we still took it, but we used position sizing to manage our risk. As you can see here, at the 3 strike calls, since this was a new opening trade, we also bought these call options and got into the same position here, marked as POS, which stands for our position, and the green color indicates a buy position. Because, based on our deep research across multiple variables and data sets, this wealthy investor bought these 3 strike calls for about $35 each, the same price as we saw earlier on the options time and sales tape. And so, when we analyze this trade, you can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below the zero break-even line, as the share price goes down, this trade becomes more negative, more loss. And as the share price goes up, this trade becomes more positive, more profitable, because it's going long bullish on HIVE Digital stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break-even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $3, the stock needs to trade above $3.35 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here, where you can also learn more strategies to boost your profits. Let us know in the comments. Do you think HIVE Digital stock will move higher or drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.